Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. The US dollar gold price has rallied a lot in the last 6 months. It's corrected a little bit over the last week or so, with Wall Street banks saying reducing their price target on gold, despite Goldman Sachs saying that gold would hit $4,000 an ounce for a price target last week. Now the Wall Street banks are saying inflation's not an issue, gold demand is waning. The US dollar gold price is down a little bit to $3,367 when we're recording this interview on Wednesday, June 18th, 2025. Today's special guest is a returning guest. He is the editor and publisher of the longest running gold and gold stock newsletter out there since the 1970s. He took over in the, I think, early 1990s for Blanchard. And he also started the famous New Orleans Investment Conference. Brien Lundin, thank you for joining me again.
Great to be with you, Jason. Yeah, just to clarify, Jim Blanchard started everything that I do today. He started the New Orleans Investment Conference in 1974 and Gold Newsletter in 1971. And I'm just very honored to be passing or carrying the torch forward into this exciting new gold bull market that we're in right now.
And we were talking before we start recording, I think you're going to get a lot of people showing up in New Orleans at the conference now that are interested, because out of all the industries, Brien, the gold stock industry, pretty much the only industry with a huge amount of free cash flow increases and profit margin increases the last 12 to 18 months.
Yeah, and it was the best performing, gold was the best performing asset of the first quarter of the year, except for one other asset, and that asset being mining stocks. And so we've seen finally mining stocks leveraging the gold. And if you think back on what gold did in the first quarter, that's a hell of a performance to outperform, which the mining stocks were able to do. And, I think the numbers are going to come in similarly for the second quarter, first half of the year, that it's the sector to be in. And it's the only sector out there that's really growing cash flows. While there's so much other uncertainty in the world, this is the one that is benefiting from that uncertainty to some degree. And, ironically, is the most certain itself, because these prices for gold seem to be real now. The market's accepting them, that they've become accustomed to gold over $3,000 an ounce. And that translates into tremendous earnings and cash flow for companies that are producing gold. And now we're seeing silver join the party. And now we're seeing the junior mining stocks also begin to perk up. So it really is a perfect storm.
Yeah, I agree. And I would also I would also argue that gold has benefited from problems with other currencies, other governments running budget deficits, and the US Treasury market problems with that, with supply and demand and yields on the US Treasury, because whether it's the World Gold Council, which just released a survey of central bankers, and they were saying that their plans over the next, I think, 12 months, not just the rest of 2025, but for at least the next 12 months, are to be large net buyers of gold tonnage still. I think 43% of the central banks that were surveyed said they plan to significantly add to gold tonnage.
Yeah, if you look at the share of central bank reserves, you see that the dollar as a share of central bank reserves has been declining. And it's not so much that the dollar share is declining, but what it's declining in favor of, and that's gold. So gold is rising. It's passed the euro as the second most common component of central bank reserves, and it's headed toward the dollar's level. Now, I don't think those two lines will cross anytime too soon, but the trends are very clear, at least from the central bank perspective. But that highlights what's really been driving this market and why this bull market has been absolutely unique in the history of gold bull markets, in that it has been driven so far, or primarily so far, by central bank buying. And central banks don't buy silver and they don't buy mining stocks. So these traditional levers on the gold price have lagged in this bull market for the first time ever. Now, as I mentioned, we're starting to see that change, because the more traditional investors around the world and Western investors who would typically be jumping into or onto the gold bandwagon at this point they want to get into the party, and they see that the gold price has moved so much, so far, so quickly, that the best way to play it in their eyes are through silver and mining stocks. So it's a transition in this market. We still see central bank buying, but we're seeing new players coming in, and they're entering this sector through mining stocks and silver because those sectors are still historically undervalued according to their own metrics and according or relative to the price of gold.
And I think a lot of famous investors, Warren Buffett and many others, whether it's Warren Buffett or Jamie Dimon or Stanley Druckenmiller, some of the other big name fund managers or retired hedge fund guys, they don't want any exposure to long duration US Treasuries. Now, maybe they're buying short term US Treasuries, say like the 1 year or 2 year US Treasury at a relatively high yield, but they want no exposure to the long bond that would have been popular in the past. And the yields are relatively high. And so I think like the central bankers, like you said, in the past, they would have been net buyers of Treasuries, especially at these higher yields. But they're looking at all the math problems coming out of DC with the size of the budget deficit, the interest payment on the national debt, how both political parties in Congress don't really seem interested in cutting spending. And they're saying, hey, wait a second, there's going to be huge inflation and bond U.S. Treasury yield problems coming up. And I think that's why they're diversifying more into gold than into euros or treasuries anymore.
Yeah, it's suddenly become a popular view. The view that we've been talking about for, at least in my case now, 7 or 8 years, that the Fed is in a trap. The U.S. is in a debt trap, and there's no escaping it. I was amused by Elon Musk and the whole Doge effort to cut government waste, and I cheered them. I had to support them in their efforts and encourage them, and kudos for trying. But all the time, we had to recognize that the effort was futile because there's just no stopping it at this point. You can't grow your way out of it. You can't cut spending enough to make a big enough difference. The only thing that can happen really is that what's happened throughout human history. The currency in which those debts are denominated has to be devalued and depreciated. And that's precisely what's happening, and the world is realizing it right now. The trend was clear for many years, but we are headed toward a reckoning.
Well, also, Brian, Doge exposed all this waste, fraud, corruption, and abuse. And I knew about a lot of this stuff because I've lived right outside of Washington, D.C. for 25 years, and hardly anyone would listen to me, even though I've had a 2 hour phone conversation with former top lobbyist Jack Abramoff, who literally told me that all the other lobbyists were doing the exact same thing he was doing. And there were tons of other white collar criminals in DC, inside the government, politicians, lobbyists, government employees, tons of people stealing 6 or 7 figures per year extra for themselves. But I think what Doge highlighted and what we're seeing now, Brian, is that these people are stealing all this extra money for themselves or their friends or family members or corporations. They're funneling contracts or just straight up stealing the funds for extra net worth. And no one's going to prison. These are white collar crimes. These are felonies. And we're not seeing people, being prosecuted. There should be thousands of people being prosecuted, like inside the government, lobbyists, both political parties.
Yeah, and that's why we had to applaud their effort. To me, it wasn't so much the degree of the theft and the impact that would have on something as enormous as the federal budget, but just the outright thievery, the criminality of it. It is just infuriating. So yeah, I think all of these people should be thrown in jail. They should continue to track them down. But again, that's they're going to eventually account for 150 or 200 billion dollars in the federal budget, which is great, wonderful. But I look at it more, it's not really going to have an effect on the overall spending in the federal debt. It's perhaps is just going to deliver justice to a few criminals, which is wonderful to see.
Well,
But
especially with the mess that Janet Yellen left, right? Because all this debt needs to be refinanced because basically they spent as much as humanly possible with the U.S. Treasury general account, the budget deficits prior to Trump administration coming in after he won the election. I mean, he inherited a mess with the amount of debt that needs to be refinanced at much higher interest rates.
Yeah, and the billions of dollars that were funneled and just rushed out the door to, uh, to favorite organizations and NGOs and the like, so it could be collected later. It was all criminal. But again, it doesn't change the trajectory of the debt, and the debt's already too large. We're adding $1 trillion to the debt every year just in interest payments. So, you know, and then where are they getting that money? They're borrowing that money just to pay the interest. It is a debt spiral that would bankrupt any organization except the U.S. government, except the issuer of the global reserve currency. But at
Oh
this
yeah.
point, it is bad enough and severe enough to upset that standing, and that's why we're seeing central banks. One of the reasons why we're seeing central banks rushing to gold in favor of gold as opposed to the U.S. dollar and the euro.
Now with the gold price basically going up in order of magnitude over the last 12 to 18 months. I mean, it gapped up enormously from it was stuck around 2000 about 18 months ago. It corrected, it got up to a 2200 and it dropped, and people were like, oh, the global market's over. And then we gapped up to 2500, quickly up to 3000. Do you think like now that the gold miners are starting to show quarter after quarter of solid profit margins and free cash flows, now the generalists, the regular fund managers and the retail investors are going to start to get interested in gold stocks?
Well, yeah, they already are. I've seen some big financings come through. There was a big financing for IS Silver recently, and you saw a lot of the usual suspects, investment banks involved. But my view is that that's also hiding some other big money, Wall Street money, that's getting involved in the sector. Um, I've heard a lot of anecdotes of Wall Street money, hedge money coming into the sector. And what people, I think, miss, we're so parochial in our views on the mining sector, and we look at it and have looked at it for years as being something where money is really tight, and we're looking at capital expenses that are a decimal point or more different than the kinds of money that's being thrown around. We just talked about Doge and the rounding errors on some of the money that they found would not only build mining projects but control entire mining camps in our little sector. So we don't understand fully that a price tag for a major gold or copper project or both that would be of $1 billion is something that a hedge fund or a Wall Street investment bank could throw at a project in an instant without batting an eyelash. And that's going to change this industry tremendously and fundamentally over the months and years to come. Once
Well,
that generous money comes in, it's going to be a flood of liquidity that's going to elevate all of the values in this tiny little sector.
Well, I think you're bringing up capital raises for a drill program, maybe moving along the resource after you drill it off to what for pre-feasibility, then feasibility. But the capital required, Brien, to go to the final stage there, once the feasibility study is ready and actually build the mine, I mean, that's an enormous amount more capital. So I don't know if we're seeing that from the fund managers that you said, yeah, but at least like the juniors are, if they're partnering with a joint venture with a mid-tier gold miner or a senior gold miner or a royalty and streaming company wants to come in and buy a gold stream with the option to finance a future mine. And we're seeing that. We're just not seeing maybe like the banks say that like, oh, here's $100 million or $200 million to go and build them. I don't see the banks handing out like that type of capital like candy.
Not now, but at some point they will. And it doesn't have to be the traditional banks that we're used to dealing with. It can be private equity, it can be hedge funds and the like that can bring hundreds of millions of dollars to an investment theme. The entire mining sector has a market cap less than Apple computer. So that we are not used to thinking in terms of the kinds of money that can be employed to our sector. Once it becomes the theme du jour, and it doesn't have to be the new AI, it doesn't have to be the new Magnificent Seven or anything like that. Just a small shift in global allocations of capital toward these sectors will lift all boats. And, when you have entire mining plays taken out by individual groups, then that money quickly flows down to the junior mining companies once that kind of capital becomes available. It isn't yet, but there are groups dipping their toes in the water, and if we continue to have above $3,000 gold, and we get $5 copper and above, and we get silver getting over $40 an ounce, we're going to see that money start to flow in a big way.
So for our retail investors who don't have a lot of experience investing in gold mining stocks and junior miners, Brien, the capital raises, like I've been covering gold and silver miners, and for I think since 2007 or 2008, I've been reading the research reports and listening to the conference calls. There's been a lot of botched financings by junior miners over the years, to where if the share price goes up or the metals price rally, a junior will come out and do an absolutely insanely large equity dilution financing. The insiders will dump a bunch of shares. Maybe they'll do a reverse stock split later. Do you think that the management teams at the juniors have learned from those past mistakes, and we're not going to see that in the near future?
Yeah, I think, and what's happened in those cases, in the worst cases that you're thinking about, is just that they had to raise money in a bad market, and their goals were not so much to advance projects or make discoveries as keep their offices open and their salaries funded. You're not, when money gets really easy for the sector, like it will again, I don't think you're going to see those kinds of desperation financings. We're seeing right now that money is readily available for the best companies and best projects. And now it's also readily available at terms that the companies themselves are largely dictating. It used to be a market very recently, I mean, as of last year at this time, a market where of haves and have-nots. The haves could raise money, not necessarily at the terms they liked, but they could raise enough money to keep the drills turning. The have-nots couldn't even get their phone calls returned. Now the have-nots are having conversations. In some cases, they're able to raise some money, but the haves are largely able to announce financings that they've already closed before the announcement, or have largely filled before the announcement, and at terms that they like. That's kind of a blanket statement. I've talked to some companies today even that have been forced to finance at a bit lower levels than they like, because the Sharpies knew that they were going to have to finance, and they drove the share price down and played the usual games. But it's becoming scarcer now, and it's becoming easier for companies to raise money, and they're raising money when they don't absolutely need to, so they are able to better dictate the terms.
Do you think that these joint venture or strategic partnerships, so 50-50 joint venture, say I'll give listeners an example with what Erdene is doing, because Erdene's in Mongolia, they're a Canadian geology and management team, and they found a mine, and then they just partnered during the bear market with the largest coal miner in Mongolia as a joint venture partner, which that company has like resources and capital and advantages in the country. Do you think that those deals are win-win? Because I've seen people criticize those types of deals, but I think like it's a lot smarter and safer. You still have upside, but then the miner doesn't have to gamble the whole company on one mine, and then if there's problems at the mine with like Argonaut Gold and Mangino.
Yeah, Erdene is a special case, but the principle applies again generally, that a small junior miner, if they're going to develop a project, is going to have to dilute their share structure significantly to raise that kind of capital. In Erdene's case, giving up 50% of their projects was a fraction of the dilution that they would have had to have undergone if they were doing it on their own. And keep in mind, they still had to dilute a bit and take on some debt, et cetera, that they'll repay fairly quickly once that project gets into production, which is coming up
Couple
relatively.
months, I think. Yeah, I think the mine's almost done.
Yeah, and I think maybe earlier than people expect. I think they're doing a good job of managing expectations from the market, but it's been progressing very quickly, and I think that highlights another reason or two why Erdene is a special case, because it's not just money that they got from that partnership. They got their entire project streamlined by partnering with the largest mining company in Mongolia. They're able to get the project permitted much more quickly. They're able to get it built much more quickly. And they've transformed the project from a foreign-owned project in Mongolia to a Mongolian-owned project that was found by a foreign company that employed its risk capital to make a discovery on behalf of the Mongolian people. It's a tremendous difference in perception that really just paves the way for the project to be developed and to deliver tremendous earnings for Erdene in very short order.
And Sandstorm Gold, which has a royalty on it and doesn't have any capital expenditure. But to add to your points there, this partnership looks like a win-win for Erdene and for the Mongolian miner and for the Mongolian people with the jobs, as they've already spent a good amount of money in exploration drilling, and they're finding additional high-grade copper and gold around the existing mine plan and then potentially additional deposits. I mean, they're talking about a district there over the next 10 to 15 years.
Yeah, and frankly, Erdene management is very credible and very conservative. And you can't help but notice that wherever they stick a drill in the ground, they turn up tremendously high grades of gold over long intersections. It is a district. They are going into production having essentially just scratched the surface of their holdings. So it's a great company. I own it. We've recommended it in Gold Newsletter for a long while, and it's performing wonderfully for our readers. And there's more ahead. Once they get in production and are able to actually show the kinds of cash flows that I feel they will, the reality will set in, and I think it's due for a big re-rating.
Do you think that Agnico Eagle has a good strategy for targeting juniors and joint venture deals and partnerships? Because it looks like they're targeting land packages around an existing mine. So do you think that juniors looking for land packages around a large existing mine are smart?
Yeah, and Agnico is, a leader in their strategy and their execution. But it's important for a big company or a producer to look ahead and not just see what the feasibility study of any project shows. People don't realize that they have this junior that finds a great project and runs the economics and comes up with an immensely profitable project and says, well, we're ready to sell to a major and they're going to pay us a whole lot of money for this. What they don't understand is that the cost of buying the company and the project is not factored into those economics and would typically dramatically change its economics. In fact, the capex may be larger than the capex of capital expense to buy the company, and the project may be considerably larger than the capital expense of building a mine. So any project that a major buys or junior company that a major buys has to have realistic upside left in it, a projectable upside in terms of resources and cash flow, et cetera. And, in some cases, even mine life has to be projectable to be much greater than what the economics currently show. So it's a difficult game, and the best miners and producers look ahead and they look at the overall land position and they have to do a good job of projecting much more than is currently been found.
Well, Agnico was doing those deals, correct me if I'm wrong, like 12 to 18 months ago, right? So they're actually doing those deals either 70% buy-in for one of the juniors and they outright bought another one. O3 Mining, I think they bought and they locked in another deal with another one around Canadian Malartic. So they were doing these deals at much lower valuations compared to now with the junior prices starting, share prices starting to rise a lot.
Yep, that's true, and that's why they're the best in the game.
I want to ask you about geopolitical risk. So we've seen what Barrick has done, what has happened, excuse me, what has happened to Barrick in Mali with their producing gold mine, where it was basically confiscated. Are there countries where you think things are actually trending in the right direction, though, and that like taxes are going to come down? They're streamlining the permitting process. They're treating foreign investment with the mining companies better. Are there any specific countries you think are now starting to trend in the right direction for pro mining and building mines?
Well, worldwide, I think there is a tendency toward, anti-globalization and bring resources home. I think Canada has improved because of the Trump tariff kerfuffle. I think the U.S., because of Trump, has improved because of the permitting. I was talking to a company today where they had the BLM on their property in advance of a drill program. And the BLM local director told his assistant they needed to get a report out on it. And the assistant said, okay, I'll have that on Monday. And he's turned to him or her, frankly, I don't know, and said, no, I need that by the end of the day. In case you don't know it, we are under a directive to advance U.S. production and U.S. projects, and we're going to do it. And it's been a completely different fundamental shift in perspective and priorities. So I think the U.S., you have to look at it as one of the best regions or the ones that have most improved the most in recent months. But it's like everything, these windows don't last forever. So I think companies have to be very aggressive and look at trying to get projects permitted or advanced as much as they can over the next year or two, because politically the winds shift.
Well, the US, it depends on the state, right? So if you're in Montana or Wyoming and there's like copper, gold, silver, maybe uranium deposit in those states versus California, I mean, it's going to be a lot easier to get a mine approved, like you said, in some of those Midwestern states or Republican states versus a state like California, where the environmentalist lawyers and all the green energy and NGO people do have funds, and Gavin Newsom's the governor and they will sue.
Yeah, it is. Generally, yeah, it does depend a lot on the states, but in California, it kind of depends on where you are as well. I believe K2 in particular is making some good progress in getting the drill permits in California. And that's one of the companies that I'm really watching closely right now.
Oh, that's interesting. I mean, California, like geology, they have a ton of potential mining deposits, but like the state is very anti-natural resource development for oil, natural gas, and mining.
Yeah, yeah, and again, things are changing.
Well, I don't know, not the voters in California. Now, at the national level, I agree with you, but at
Yeah,
like the state and local level, I'm not going to agree there right there. Not the stuff that, as long as Gavin Newsom is the governor, I mean, I don't really see that changing.
yeah, I
Okay.
agree. I agree with that. I think that as far as federal permitting and the like, and and I've been very anti-California for decades, for good reason. I am seeing in some individual cases some progress being made, though.
I hope you're right. I mean, I am from California. I grew up there, so I lived many, many years there. But I want to ask you about Argentina. So you mentioned Aya Silva, right? That's in Argentina. There were some huge discoveries, what on the Argentina Chile border recently, what with Lundin Mining and Rio Tinto and BHP built in a massive copper, gold, silver polymetallic deposits. Do you think that Argentina, with Malayan power, the reforms that he's trying to do over the last like 12, 18 months, do you think that Argentina is now pro mining?
Yeah, I think it is. But just to correct your first statement, Aya is actually in Morocco, and not Argentina.
Oh,
Um,
I think I'm thinking about a different silver junior. I can't remember which
Yeah,
one.
I think you are, and there are a few in Argentina. But yeah, that's been a tremendous change in itself. Uh, so I think that's an area that's improved. Um, and again, it depends on where you are. There will be either a premium or a discount applied to mining projects and companies, depending on where they operate. So sometimes a riskier or less attractive region or is worth it if the size of the prize justifies it. So you always have to balance all of these different variables before you make an investment.
Okay, I was thinking about Abra, ABRA, Abra silver, which is in Argentina. That's the difference. Silver junior. You said Aya, so I was thinking of Abra. So it's not that much different on the spelling.
Yeah, that's a great company as well, doing extraordinarily well, and I own that one as well.
Now, in terms of potential silver mines, because the silver price, are we going to see new silver mines come online in the next couple of years? Or do you think that a lot of the potential silver mines still need the silver price to stay at a higher level, say $40, and there's not a lot of capital available to build primary silver mines right now?
No, they can make good money at current prices. $35. Still a decent margin uh, for most silver miners that will have an ASIC in the low 20s. The one of the things I think we're going to see as silver starts to really perk up is somebody is going to come out and with a business model, a publicly traded Canadian listed company is going to come out with a business model to roll up a lot of these small privately owned Mexican silver mines. That will be dependent, of course, on the political situation continuing to improve in Mexico. But man, once fever hits, they're going to come out of the woodwork to take advantage of it. And I don't think it's necessarily a bad business model. It's been done before in other markets and other bull markets. But somebody's going to do that again, you can bet.
And it won't be Fresnillo because Fresnillo is already too big. What they're the largest miner in Mexico. They have a massive amount of silver production. I would actually like to see them target more gold mining production. So they do have some, I think around 500,000. So they're close to a mid-tier gold miner right now. But I'd like to see them go buy more gold mining deposits too for more diversification.
Yeah, I focus so much on the junior sector, and I just know that there's lots of silver projects in Mexico. I mean, everybody's looking to be the next Vizsla Silver, and there are a few candidates, frankly, out there that are well positioned to do that. But I think we're going to see some new silver plays come out over the months ahead, especially if we see silver keep going like it is.
Okay, so you're not shying away from Mexico then, because what we've seen stuff in the election over the last like 18 months that people were worried about that. I think Fortuna Silver just sold the San Jose mine. They're producing silver mine in Mexico because there was games that the Mexican government played with permitting and stuff like that, and they had to pay millions of dollars. They claimed that, and then First Majestic Silver had a tax bill. So there's been games with the silver mines over the last few years in there. So you think that that's not an issue then?
No, I think it's still an issue. I think it's improving. At least perception is improving. I still am, frankly, I don't know if I would say shying away from Mexico, but applying a Mexico discount to risk discount toward companies I'm looking at in Mexico. But I think it's improving. I'm hearing a lot of stories and anecdotal evidence. Granted, much of that anecdotal evidence is coming from silver companies operating in Mexico, so talking their book. But the confidence is growing that business will get back to normal. Mining business will get back to normal in Mexico, and I think over the long term it has to.
Well, I mean, from a tax revenue standpoint, it would be smart for the Mexican government to not, confiscate the mines, destroy foreign direct capital investment, because that would destroy sector and jobs and tax revenues and all those things. And then the local investments the mining company makes into the community. But over the years, Brian, with a lot of these different governments and countries, we've just seen so many examples of just dumb policies from the local government where they block a mine, they confiscate it, they shut it down, they dramatically increase taxes at the wrong time, and then they destroy an entire industry in their country, and then no investment from the mining company gets invested in what power infrastructure, schools, water supply, all those things that the local people want.
Yeah, and over the short term, that will continue to happen in individual cases. Over the long term, those projects will end up having to be developed by somebody, and that they will have to pay the piper at some point. But again, that's the key. You have to apply that risk discount to any project. You also have to realize as a junior mining investor that you're trying to take a small slice out of that development timeline. You want to be in the early stages, discovery to beginning of development, or discovery to expansion of a discovery, and then you want to be out, and maybe you want to be back in right as a mine is ramping up for production. Um, but you're only looking, if you're an active and smart junior mining investor in a supportive market where projects are moving along, you're looking at perhaps a time frame of 2 years where you want to be in a stock. So that alone mitigates your risk to some extent, because you're not in that company or in that project for the entire 8 to 10 to even 20-year timeline to development.
Are you talking about the Lausanne curve, and you're talking about specific spots of targeting the Lausanne
Yeah,
curve?
yeah, yeah. And if you're, a country has to hold together for only that period of time where you're going to be holding this exploration stock, or a company that's made a discovery and is still undervalued, and you're holding it for that re-rating. The hardest part of investing in junior miners is the selling part, is not falling in love with a story. And that's, frankly, that's the hardest thing that I've had to manage over the years.
Oh, it's not when like the larger partner plays games like with Mag Silver, because I think that's one of the reasons why Mag Silver sold the company is like Fresnillo is playing games. They played a lot of games over the years. There was lawsuits in the past. There was a slow play by Fresnillo to build the mine and construct it. And now recently, what Mag Silver shareholders were telling me before Pan American just bought them was that Fresnillo is playing games with the exploration budget and expanding the resource.
Yeah, individual cases are all over the board, and it can be used to support any argument. But again, if you were in Mag early on, you did very well. And sometimes, and quite often, the biggest mistake you can make is not taking those profits, especially in a bull market. In the early 2000s or in the 2000s, that market produced so, life-changing profits from everywhere for so many investors. And I would endeavor to, and it's often harder to take your own advice, and I would recommend to my readers and followers that you need to take those profits off the table. You need to not only sell your stake in a junior miner when it's done what it needed to do for you, but you need it often to take your profits out of your brokerage account and put it in illiquid investments, or just put two steps between you and plowing that money into the next junior mining story. Taking profits, dipping a ladle into that flow of capital gains is important. And it seems, pretty crazy to talk about that, especially given our experience over the last 5 to 8 years or so. But in that kind of a scenario, you're making so much money, you need to be able to keep that money.
I think to your point there, a lot of producing gold and silver miners are not long-term buy and holds. Yes, you have like an Agnico Eagle or Lundin Gold bucking the trend, or maybe an Alamos Gold, but the majority of gold and silver miners, Brian, if you bought and hold them over the course of many years, I mean, go and look at the max charts of a lot of these companies. They're not doing very well. Now, recently they have started to rally, but if you've held them for many, many years, you're still not at break even.
No, you're not. These are not growth companies. They really aren't. I mean, if you bought Barrick 20 years ago, are you looking at a making money over that time frame? I'm looking at, I just brought up the chart as we're speaking. It is at the same price level that it was 20 years ago. These are not growth companies.
Well,
You buy
because the
them.
metals price was in a bear market, and the former management team at Barrick Gold wrote off many billions of dollars of bad deals and got fired.
Yeah, it's a long story and with a lot of twists and turns. But the bottom line is, you buy gold mining companies, silver mining companies in general, because you foresee an increase in the price of the underlying metal that's being produced. And this is the way you leverage that trend. Uh, so it is something you buy when the time is right. Now, I would argue that the time is right now, and has been over the last year.
Yeah, on the max charts, Brian, out of all hundreds of gold stocks, including juniors, producing miners, gold and silver ones, I mean, only 5 of them are up enormously since like 2009, and 3 of the 5 are the largest precious metal royalty and streaming companies. And that's because they had capital available with the business model and diversification. They would still have free cash flow and profit margins. They could invest in the bear market, and they were doing tons of smart deals that at the time were heavily questioned, and now they're like minting free cash flow.
Yeah,
And
yeah.
I think they will fund. I think those guys have opportunities now to go and do deals with juniors and fund exploration. I mean, Sandstorm Gold has a bunch of royalties in their portfolio that they paid $1 million or $2 million for, that are probably worth 20, 30, 40, $50 million or more right now. And they bought it during the bear market for $1 million or 2 million each on a giant land package. And now those juniors are drilling, and potentially there's going to be mines there.
Well, yeah, that's foresight, and the best have that. And Sandstorm, that group in particular, has diversified their royalty offerings beyond Sandstorm itself. So, trying to get different levels of the market, projects that are smaller than they typically get involved in, copper specific projects like Horizon Copper. So, that's the kind of foresight that benefits shareholders. It's a great example of why sometimes you just invest in a management team and and have confidence that that team is going to find the opportunities and exploit them.
Well, that's the thing about investing in the bear market, right? So for the first few years, maybe in 5 years or longer, the deals don't look too good. And then you have a change, a paradigm shift, right? You have a huge rally in the metals price. Because when Sandstorm was investing in a lot of those royalties on the juniors and helping these juniors survive or drill or move things along for a mine, the gold price was way below $2,000 an ounce. Sometimes it was stuck around 15, 1600. And now, like, they're starting to reap the benefits, is starting to bear fruit with those royalties that they paid $1 million or $2 million for. Some of those things are like call options that don't expire, and they're going to cash flow $1 million or $2 million a year for a long time if the mine gets built.
Yeah, they are. And you look at those non-expiring options plays, for so long, many years, and we were actually instrumental in getting some of these launched. We had optionality plays. Silver Standard was the first of them that we helped get started, where the idea was to buy big silver resources that were out of the money, weren't economic at current prices. And when we started that and kind of were part of rejuvenating Silver Standard, silver was trading under $5 an ounce. And those kinds of projects were available. And then, that's a lot of companies have come and applied that as well to the gold sector. So there were big projects that were optionality plays. They were not economic at current gold prices. And the idea being is gold prices rose, all of a sudden they would be economic and all this value would just fall immediately to the bottom line. One of the biggest things that the market is missing right now is that at current gold prices, every one of those out of the money optionality plays is not only economic, but wildly economic. And in many cases, I believe, realistically developable uh, with the kind of capital that will be available to this market.
As long as metals prices don't crash, I agree. So if metals prices stay around these levels or go higher, I mean, we're going to start to see the royalty and streaming companies, the larger and medium-sized ones, and the banks, and even the generalists with pension funds all want to chip in capital to bring on additional gold or silver production.
Yeah, and those optionality plays are now economic and have and represent much more value than the market is currently giving them. So that's something that a sector or a micro sector that is due for a big re-rating, and that has not happened yet. So that's one of the big things I think is going to happen. One of the great areas of value in this market right now, in this junior market.
So you focus on juniors. You don't focus on what the senior and mid tier miners or the larger precious metal royalty and streaming companies, because I mean they're minting free cash flow right now. They have options with the free cash flow. Do you think we're going to start to see more partnership deals announced with like the royalty and streaming companies, where a couple of them combined and fund a junior? I think what was it, Franco Nevada and Cisco put 500 million into a junior in the last 6 to 12 months, that once they get the feasibility study, they're going to provide additional capital to build the mine. Do you think we're going to see more of that going forward?
Well, in general, yes. I think we've seen that throughout the history of mining. Franco's been very aggressive. I mean, they put what 750 million was it into Sol Gold with the Cisco. So, or was it 500? I can't remember, but it's still a tremendous
I
investment.
think it's in stages. So I think they put in a certain amount now, and there's more commitments later.
Yeah, and the first stage was significant, 100 million or so. So it's they are smart. They are thinking ahead. They know that these projects will be transformational in the industry. And that's what leadership does, and that's what the good management teams do. But again, I think you're also going to see a lot of stupid money, big money, come into the sector and realize how undervalued it is. You're going to have private equity and hedge funds. I mean, private equity is buying, rolling up local companies, HVAC companies, roofing companies, and the like around the country. The valuations in the mining sector are so out of sync with where metals prices are and where they're headed that you're going to see tremendous money flow into the sector over the years to come.
The only private equity company I know that's been doing that already at scale is like Orion Mine Finance. I mean, they've been doing that for over a decade now. They're not publicly traded. I mean, I'm kind of surprised they're not publicly traded on the Toronto Stock Exchange as like a private equity mining investment company.
No, but they are and have been focused on mining. I'm talking about generalist, masters of the universe who look at the sector and say, "Oh, we can run this better than these bozos," and they're going to just throw money at it.
Oh, those
Uh,
guys are into artificial intelligence and data centers. They're looking at uranium, next generation nuclear power, natural gas. That's where they're green energy. They're looking at investing all around a data center. That's what those guys are focused on right now.
well, that is correct, but I'm saying that we don't have to be the next AI. That the mining sector doesn't have to be the next AI level theme. You just have to have a little bit of that money that goes towards those sectors attracted to the mining sector. And in fact, that is kind of a entree to the sector at large. It used to be you'd have to get gold moving, and then investors would look into other sectors like rare earths, like uranium, like copper. I think you are seeing to a large degree that uranium and critical metals and rare earths have suddenly come into vogue, and they will kind of be a sector into the overall mining or an entree into the overall mining sector, including gold.
Do you think, as we wrap up here, that we're going to have to see higher price floors for gold, silver, and copper going forward? Because if they're going to increase production, if there's demand for more metal, for the miners to bring on these deposits with additional capital, we're not going to see $20, $25 an ounce silver. If the demand for solar panels, the demand for silver is increasing, the miners are going to have to see like a much higher base price for silver, don't you think, going forward? Like at least $30, $35 an ounce, maybe even higher than that as an incentive for a new price floor to bring on additional projects?
Yeah, I think so for silver, but I think we're going to see that as well. But your question also highlights another thing I'd like to stress, and that's that perhaps the biggest change in the current market right now is that no one's really that concerned about the gold price and where it's going. That the market and investors have come to accept that $3,000 gold is a reality. It's a new reality, and it's the new trading range for the metal. There's not this fear any longer, at least I don't sense it, from investors that all of a sudden we're going to get slammed by Mr. Market, wake up one morning and find that the gold price is down hundreds of dollars and below 3,000. The question now is, when are we going to get back to 3,500, and where do we go from here? We have such a large safety margin, such a large buffer between the current gold price and levels that would concern mining companies and producers, that nobody's really worried about it anymore. We know that these mining companies are going to continue to generate huge cash flows. They will also continue to raise their cost of production because that helps them raise production as well. But that's one of the biggest changes I've seen in the market recently is that we've come to accept $3,000 gold as the new reality. And that changes your perception toward everything. If you don't feel like you're going to get slammed tomorrow or somewhere out of the blue, you feel more confident in deploying capital into the sector.
Well, except for the Wall Street investment banks that are lowering their gold price targets, Brien, over the last couple of days below 3,000. I think I just saw 26 or 2,700 now. They're expecting a huge correction. I think that's Bank of America or one of the Wall Street investment banks after predicting a huge rally in the gold price. I think only like 10 days ago, Goldman Sachs was saying 4,000. But if you speak to regular investors, we're talking like large generalist billionaires like either Jeff Gundlach, the bond fund king, or hedge fund manager David Einhorn. I mean, they're talking about $3,800, $4,000 gold in the not too distant future. David Einhorn put it in his newest shareholders investor letter. He's talking about $3,800, $4,000 gold in the near future. And Jeff Gundlach said something similar recently. He was just talking up gold and gold stocks. And the guy in the past, I think he had a small gold fund, but he didn't want to say anything nice about US Treasury bonds, really.
Yeah, and those are really smart people. A lot of those Wall Street banks, I think Bank of America was actually talking like $2,400 gold.
They also have the largest silver short position too, I think now. I think they took it over from JP Morgan.
Well, they are trend followers. They kept raising their targets for gold as the price was rising. And what we're seeing right now is gold ending, I believe, its correction. These corrections in gold have been shallow and short, and we had a breakout a couple of weeks ago that I think essentially ended this correction, and we've been somewhat on the recovery road since then. I'm not worried, but I'm a gold bug and have been a gold bug and a gold bull for a long time. I think that the generalist investors and those people involved in this sector who are prone to worrying about the gold price no longer are. And even the most extreme predictions for this so-called correction don't have the gold price going below $3,000. And that's still pretty darn good.
And the surprise gold price rally that started a couple of months ago when people were saying it's getting down to 2,700. And I had a lot of guests on like, oh, gold's overdue for your 15, 20% correction down to 2,700 or lower. The data came out and we saw the People's Bank of China, 7 months in a row purchases. There was even a Bloomberg article recently saying that China is buying a lot, over the counter and the LBMA that's not being accounted for. I think there was one estimate, 10 times as much gold purchases that's not being accounted for. I think that was a Bloomberg article talking about that.
Yeah, it's been an amazing run, and gold did need to cool off. But what people don't appreciate, I think, is the fact that central banks buy gold and they're not that price sensitive. And it's a new world now. Again, I don't think the dollar is going to be supplanted as the world's reserve currency anytime soon. but we have to recognize the trend. And the trend for the dollar is a reserve currency is lower, is downward, and gold's is upward.
The
Um,
other thing about central bank gold purchases is they're not net sellers. So once it goes in, once the central banks, the non G7 ones, buy gold tonnage, they're not selling it. They're not trading it like a hedge fund. They're not buying it and selling it.
well, I'm old enough to remember when they were, and so I wouldn't rank it as an impossibility. However, I don't think that what we've seen is going to change. This has been a generational shift in attitudes toward gold and the dollar and fiat currencies in general. And I don't see that changing for, not years, but decades ahead. Uh, it Gold is being reestablished as the true global reserve currency, the only safe haven after a 45-year stretch in which we saw ever easier money and ever greater debts. So, those debts were incurred in fiat currencies, not just the dollar, but in fiat currencies around the world. The only thing out there that really has been proven over thousands of years to protect you against this kind of currency debasement is gold. Central banks know that as well as anybody, better than most. And that's why one of the reasons why they're going to the safety of gold. The other one is they want to insulate themselves from the dollar hegemony. And in that trend, I don't think is going to change anytime soon either.
Well, they also don't support a lot of the policies, monetary policies or war policies, all the different economic, monetary, fiscal policies, foreign policy for war out of Washington, D.C. from both political parties in Congress or the White House. So the comments from the central bankers back up what you said. I think there was a quote in a World Gold Council article from a central banker in Poland, and he was basically just talking about how they already have a lot of dollars, US Treasuries, and euros, and they're diversifying away. It's a hedge. Buying physical gold tonnage is a hedge for them on all those different things that they're going to keep accumulating gold because they weren't diversified enough, and it's hedging all the other things.
Yep. And of all things, the European Central Bank had a report out noting the instability of the global paper gold market.
Wow, they're starting to sound like gold bugs.
They literally said what we've been saying for years, and it was quite amazing.
Well, I want to thank you so much for your time today, Brien. Please tell my listeners more about your newsletter and also the New Orleans Gold Conference so our listeners can start researching the conference because New Orleans is a good time to visit in October, November when you have the conference.
Yeah, the New Orleans Investment Conference is the world's longest running investment event. We just celebrated our 50th anniversary last year. It is, simply put, the best place to be in a metals and mining bull market, and it will prove to be so again this year. I can tell you that in the early 2000s, there was so much money made by going to this event, getting predictions and forecasts and picks from the world's top analysts, from macroeconomics to individual markets. And it is the place to be, and we have a money back guarantee. So, we will refund your registration fee if you don't find it's everything you expected it to be. We very rarely had to do that. Gold Newsletter is where I tell readers what I found and the best ways that I think for them to make a lot of money in a relatively short period of time in the mining sector. And we have a track record that's as good or better than anyone else over decades. It is the longest running investment newsletter in the world. So very proud of that. We have a legacy to uphold, and you can find out more about Gold Newsletter at goldnewsletter.com and about the New Orleans Investment Conference at neworleansconference.com.